Okay, you ready? Yeah, okay, exercise number 1. This one's pretty straightforward. We're just making an income statement. So we start with our revenue. Subtract our cost of goods sold. And what does that give us? Gross profit, right? In this case, it comes out to $496,000 of gross profit. Then we can subtract our operating expenses and get our operating income. Okay, that was something I'm sure you were familiar with from financial accounting. So again, we normally don't have the minus signs there, but just for reference, we're subtracting cost of goods sold to get gross profit, subtracting operating expenses to get operating income, or sometimes you'll see it referred to as net income. Any questions on that one? Okay, so let's move on to something else then. Exercise 5. Now this one is a little more time consuming. Okay, let me just move it down so it's a little easier to see. Okay. Exercise number 5 says this company has a range of production. Actually, that doesn't matter, so don't worry about that. The following cost data represents average cost per unit for 15,000 units of production. So the numbers that they gave us, these average cost per unit, are based on 15,000 units of production. Okay? The first thing we have to do here for A is figure out if we produce 10,000 units, what is the variable cost per unit? So let me ask you, does the variable cost per unit change based on production? The variable cost per unit? No, it stays the same, right? The total variable cost changes, but the variable cost per unit stays the same. So they're just trying to throw us off by saying 10,000 units are produced. It doesn't matter. Our variable cost per unit will be the same as it was up here with 15,000 units of production. It's going to be materials. That's a variable cost. Direct labor is variable. Indirect materials, normally they would put that as part of the manufacturing overhead. In this case, they broke it out separately for some reason, but it is a variable cost. So that is going to be part of our variable costs. Obviously, fixed manufacturing overhead is fixed, right? It's not variable. And variable manufacturing overhead is obviously variable, right? Then we've got some fixed selling and administrative expenses. Again, those are fixed. And variable sales commissions, those are variable, but those are variable sales costs, not variable product costs. So to figure out the variable cost to produce these units, it's going to be direct materials, direct labor, indirect materials, and variable manufacturing overhead. So if we go down to A here, take these three, $12 for materials, 10 for labor, 2 for indirect materials. Then for variable manufacturing overhead, it was $3. And then all we have to do is add those up. We get $27, and that is our variable cost per unit to produce this company's products. And we already said that that variable cost per unit will stay the same, regardless of how many units we produce. So that same amount goes under 10,000 units. The total will change, right? Once we multiply by the number of units, but the variable cost per unit stays the same. So that is all we have to do here for A. Any questions? Okay, so let's look at B. B wants us to break down the variable cost per unit for 18,000. Okay, we're not going to fall for that again. We know if $27 is our variable cost per unit at 15,000, it's the same at 10,000, and it's the same at 18,000, right? So $27 is the answer. Any questions there? All right, let's move on to C. If 21,000 units are produced, what are the total variable costs? So how can we figure that out? It's $27 per unit. We're making 21,000 units, right? How do we get the total variable costs?
Multiply the variable cost per unit by the number of units.
That's right. Just take that 21,000 units, multiply by our $27 variable cost per unit, and that gives us the answer. $567,000 is our total variable cost. And for D, what would be the total variable cost if we produced 11,000 units? Can we do the same thing? Take our $27 variable cost per unit, and this time we just multiply it by 11,000 units. And we get $297,000. Okay, is this making sense so far? Okay. All right, let's go on to E. E says, if 19,000 units are produced, what are the total manufacturing overhead costs incurred? Okay, now this gets a little trickier. They're asking for total manufacturing overhead. So let's look at our per unit manufacturing overhead. I mentioned that indirect materials is usually included in manufacturing overhead. In this case, they just separated it out, so we'll just ignore that, okay? And based on what they're telling us, there's $4 of fixed manufacturing overhead per unit and $3 of variable manufacturing overhead per unit. So that means together there's $7 of manufacturing overhead cost per unit, right? But that $7 assumes we're producing 15,000 units. Remember how the variable cost per unit stays the same, but the fixed cost per unit changes based on production? So to answer this question about 19,000 units, we're going to have to figure out what would be the fixed cost per unit with 19,000 units. So who remembers? We had a similar problem earlier. How did we solve that previous one? That's right. We have to first figure out our total fixed costs, and then we can divide it by 19,000 and know our fixed costs per unit based on 19,000 units. So how do we get our total fixed costs?
Add up your fixed variables.
We're going to take this $4 fixed manufacturing overhead per unit, multiply that by these 15,000 units it was based on. That will give us our total fixed costs, right? Because this $4 number is based on 15,000 units. So when we multiply 4 by 15,000, we get 60,000, right? So that is our total variable cost. Let's make a note of that. I mean, total fixed costs. Total fixed costs equal $60,000. Okay. So now that we know that, we can, oh, I'm sorry, total fixed costs, I'm sorry, that's not exactly right. This is the total fixed manufacturing overhead. Right, that's the cost we're talking about. So the total fixed manufacturing overhead is $60,000, right? That was the $4 times the 15,000 units. Then we can divide that by 19,000 units. To get our fixed cost per unit, our fixed manufacturing overhead cost per unit. So if we do that, $60,000 total fixed costs divided by 19,000 units comes out to $3.16. Okay, so we now know our fixed cost per unit at 19,000 units of production. The question was, what is our total manufacturing overhead per unit? Right? So now how do we get there? From the fixed manufacturing overhead per unit, how do we get to the total manufacturing overhead per unit? We're missing the variable part, right? So now we just add that $3 variable manufacturing overhead to the fixed manufacturing overhead per unit. And we get our answer, $6.16. Oh, but you know what? I'm answering this question. Sorry, I skipped ahead. I answered manufacturing overhead cost per unit. This is total manufacturing overhead costs. So sorry about that. Let me back up. Well, total manufacturing overhead cost is going to be our fixed costs, which we already know is 60,000, right? Fixed manufacturing overhead is 60,000. Plus our variable manufacturing overhead. What would be the variable manufacturing overhead for 19,000 units?
Isn't this one for 23?
E? E is 19,000.
Oh, what's that? Okay, never mind. Sorry, I'm on the wrong one.
No, that's okay. Because I skipped around. So, so what would be the variable manufacturing overhead for 19,000 units? We know it's $3 per unit. So we just multiply that by 19,000. Okay. So our variable manufacturing overhead is 57,000. And that was 19,000 times 3. And if we add the fixed manufacturing overhead plus the variable manufacturing overhead, we have $117,000 as our answer. Okay, so that is your answer for E. And if we wanted to double check what I already calculated here for G, we could take that 117,000, that's our total manufacturing overhead cost, right? For 19,000 units. And if we divide that by 19,000 units, we get $6.16 per unit. Okay. So we can confirm that that is the right answer. Now that you're all totally confused, let's try F. F is for 23,000 units. If 23,000 units are produced, what are the total manufacturing overhead costs? Okay. So the manufacturing overhead has a fixed part and a variable part. we already know the fixed is $60,000, right? How do we figure out the variable part? Right?
Multiply the variable cost by the units produced.
Yeah, 23,000 units times $3. The same thing we did down here. So it's basically same formula. We're taking 60,000 fixed manufacturing overhead, but 23,000 times 3 comes out to 69,000. And when we add that 60,000 of fixed plus 69,000 of variable, we get $129,000 of manufacturing overhead. Okay. And the last part of this exercise, what would be the manufacturing overhead cost per unit if we produce 25,000 units? So since we're back to the per unit cost, we know variable manufacturing overhead per unit is $3, right? And if we add to that the fixed manufacturing overhead per unit, that will give us the total manufacturing overhead per unit. So what we need to figure out is the fixed manufacturing overhead per unit if we're producing 25,000 units. So how do we do that? What was our total fixed manufacturing overhead? Do you remember?
60,000.
60,000. So how do we turn that into fixed manufacturing overhead per unit? Divide by the number of units, right? So if we do that, we take that total $60,000 of fixed, divide by 25,000 units. That's $2.40. That is our fixed manufacturing overhead per unit. So together, our manufacturing overhead per unit comes out to $5.40. Okay, that's the variable part plus the fixed part. Any questions? Too many to go over. All right, let's move on to 6. Like maybe some people were still taking some notes there. If you find you're getting stuck, you can always reach out to me, email me, meet with me during my office hours on Zoom. So number 6 is a similar thing with a service company. So in this case, the units are clients, okay? All right, so it says last year, this company provided services to 700 clients. So the data that we have is based on 700 clients. Their total fixed costs were $159,000. I'm going to put that here under fixed costs because we know those total fixed costs stay the same at every production level, right? And it says the variable costs were $87,500. Okay, but remember that's based on 700 clients. So with that information, how would we calculate our variable cost per client? If we know our total variable cost is $87,500, and that was based on 700 clients, we divide. That's it. See, the math is not hard. It's just knowing what to do that's hard, right? Okay, so that means our variable cost is $125 per client. And that stays the same. That variable cost per client stays the same at every level of production. Okay, now that we know that, can we figure out what our variable cost would be if we had 500 clients? Multiply. Take that 125 and multiply by 500. So we get 62,500. We can do the same thing for 800 clients. We get 100,000 even. And we can do the same thing for 900 clients. Multiply by 125, we get 112,500. Okay, so now that we know at every level of production, our fixed costs and our variable costs, how do we get our total costs? We add them, exactly. Okay, so I'll just fill these in here. Okay. Now that we have our total costs, let's move on to the next section. How do we figure out our fixed cost per client?
Divide by number of clients.
Say it a little louder.
Divide by number of clients.
Okay, so we're going to take our total fixed costs and divide by the number of clients. That's exactly right. So we can do that for 500 clients, we get $318. We are going to do a little bit of rounding on this one. For 800 clients, we get, we'll call that $199. And for 900 clients, $177. Okay, and then how do we get a total cost per client? We add them, exactly. Okay. So we get 443 in the first column. 324, I believe, in the second column. Is that right? Yeah. And then $302 in the last column. So what you might notice, our total fixed costs stay the same at every level of production, but the total variable costs increase, right? The more we produce. Our fixed cost per client goes down the more we produce, and our variable cost per client stays the same. Okay. One more exercise and then a quick look at the problems. So the one I skipped here was number 11. Number 11 is another copy machine situation. It's pretty similar. So I'll just run through it real quickly. It's got 2 months, 9,000 copies for $480 and 5,000 copies for $320. All we need to do is figure out the variable cost per copy. So we're going to take the difference in costs. I don't know why that's blue. Divided by the difference in copies. Okay. And that's going to be $160 divided by 4,000 copies. And that comes out to 4 cents per copy. Okay, so very similar to what we did earlier. All right, any questions on these exercises? Let's take a quick look at the problems. The first 3 problems in the problem set, you can handle. It's just making income statements from the data. Number 4, you're going to classify each cost as fixed or variable and product or period. We did this earlier, right, as an exercise. So this one's gonna be pretty similar. Just do your best here. I think you basically get the concepts, and this will help test out and see how well you understand. Let's look at 5 and 6. These are both, okay, no, number 5 is actually pretty easy. Number 5 has prime costs. Who knows what prime costs are? Prime costs are direct materials and direct labor. Okay. It has manufacturing overhead, which is the other production costs, right? There's direct material, direct labor, everything else related to production is manufacturing overhead. It has product costs, which we know are any costs associated with production, and it has period costs, which are not associated with production. Now, this is going to be pretty easy because you already have them identified. So all you need to do is find the numbers here that match up with these different categories, and then total up each section. Okay, so I have confidence you can do that without a problem. The last one is going to be another high-low activity. We'll do it just like the other exercises that we did. You're going to take the high month. No, high month is April, low month is May. Try using those same formulas, okay? We'll take the difference in costs divided by the difference in yachts shipped. And you're pretty much doing the same thing. There are some differences here, like in C. It tells you what formula a least squares regression came up with, and you're going to compare the formula you came up with and see how close it is, okay, to this one. And the other difference is for E, it asks you to think about what factors other than the number of yachts shipped would affect their shipping expense. So here again, we see a perfect correlation between the number of yachts they ship and the expense. But what other things could possibly impact those costs? So think maybe weather events, fuel price changes, other things that are not normal everyday events that could potentially change those costs. So that's pretty much it. There aren't any other surprises in there. Any questions on anything? Okay. All right. Well, email me if I can be of any assistance. Be safe out there. I'll see you next week.